Bitcoin looks to be gearing up for another step to the upside. In this video, we're going to be jumping down into the technical analysis of BTC, reviewing what's been going on and where I think things could potentially be going next. Now, as I get into this video, if you find it useful and informative, smash that like button. You do appreciate that. If you are new to the channel, then why not go ahead and subscribe? Tapping the bell, selecting all the notifications, and you will stay up to date with everything that we do here at Cheeky Crypto. Now, if you haven't yet joined us in Discord, what are you waiting for? Check it out. Link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and it's the first place we go to notify you of everything that's going on in the crypto space. Let's jump right down into this one. So Bitcoin paired up with USDT. We're on the 1 hour time frame and we are using a 𝗕𝗘𝗪𝗏 spot exchange as the data source. So if you want to replicate this chart, that's kind of what you're going to be looking for. Now, we are using smart money concepts by 𝗕𝗘𝗪𝗪𝗀𝗪𝗀 here. This is it's a pretty good indicator. It gives you the idea of kind of when big money is coming in and coming out of the space. It creates fair value gaps. It also shows you market structure and things like that. But the 𝗕𝗪𝗪𝗀𝗪𝗪 indicator in itself, it's hit and miss. Like sometimes it doesn't draw everything as you would expect it to, and sometimes it just misses things altogether. So it's important that we also have an understanding as to how to draw it ourselves and all that kind of good stuff. But let's jump down into this. So as you can kind of see on this view here, we have a trend line that was broken to the upside. Okay, so this trend line in itself is just being used to symbolize the lower highs that were created here, and then a break from there to the upside. Now, this trend line in itself hasn't been retested or anything like that. I'm not suggesting that it has to be tested again. I suspect that it might, because we broke through it. We never really tested it as a support line, just a resistance line. We can see that we've got all of these green boxes on here. These are the fair value gaps. So when we broke to the upside, we left behind all of these gaps. Okay, these gaps basically represent pockets in the price action where the market was illiquid. Okay, there was not enough liquidity in these ranges. Now, this is generally important because according to smart money concepts, if you follow along with it, it suggests that price will move back down or up into fair value gaps, right, when they get left behind. In the same way that you see with your CME gaps, right? When you have a CME gap, generally speaking, you would expect the price action to eventually gravitate back towards there as well. Okay, so it's one of those, right? We keep a close eye on it. We'll see how it kind of plays out. See if I can get this snapped in here. I probably can't. I'll zoom in a little bit. So it's one of these things where price action generally wants to come back in and it wants to go back to these gaps, and it's basically just a way of reviewing the market or looking at the market through a slightly different lens. Many people will just draw a trend line on there and give you some buzzwords or whatever, but we're going to go a little bit deeper than that. We want to kind of take a look not only at the kind of psychology of the market and who's buying, who's selling, and what kind of bearing that may have, but also review some of the standard, more typical kind of analytical chart patterns and things like that as well. So as you can kind of see, if I zoom out of this now, you can kind of see that we have some pretty interesting kind of fair value gaps, right? There's a lot of them, and that in itself is a little unusual. You didn't normally expect to see so many fair value gaps when it comes to the price action, right? And so this is mainly because we have to understand what is creating the fair value gaps. Okay, and for that, I'm just going to jump on over to 𝗕𝗘𝗪𝗪𝗀𝗪like we would usually do. We'll go to trade spot Bitcoin, and we'll just review why we see fair value gaps, right? What makes these things appear in the charts? Well, as I often say, it's actually quite a simple one. It's illiquidity, right? And that illiquidity is created from the order books, essentially, right? So large orders coming on in, and there's not enough sellers to basically fulfill those buyers, right? Or buyer, depending on how many there are, right? We use smart money as a concept, but basically what we're talking about is a large volume of money or stable coins in this case coming in looking to buy Bitcoin. Okay, so an order comes in here, let's say at $27,000, right? And there's not enough people selling Bitcoin at that level, right? And you've got to bear in mind that there's always a buyer, there's always a seller, right? Everything has to balance. You can't just magically buy Bitcoin from an exchange. Someone's got to be selling it. And that's either going to be the exchange that is selling it, or it's going to be another individual or group of individuals that will be selling, right? So when you've got a large buy order and you're trying to buy, let's say, 10,000 Bitcoin, and all of a sudden, there's not enough people selling Bitcoin at the price of $27,000, well, price is going to have to move upwards to find sellers, right? So it's going to go and move up, find sellers, and then basically you're going to buy Bitcoin from those individuals, right? So in this particular case, with this highlighted fair value gap, price has moved from $27,000 to $28,000. So it's an extra $1,000 on Bitcoin. Now, if you're buying, a substantial amount of Bitcoin, a large order of Bitcoin, you're not going to be overly happy about paying the extra $1,000 for that BTC, right? That would be quite illogical. You wanted to pay $27,000, not $28,000, right? Not unless, of course, your objective is totally different. If your objective is not to necessarily think about the price action of BTC for your long-term hodl position, but instead your objective is to create pockets of extreme liquidity that you can sell into at higher price ranges, i.e. all you're doing is pumping the market with the intention of dumping on it, well then you don't really care too much if you pay $27,000 or $28,000, because you're intending to dump that Bitcoin maybe at $31,000, $32,000, right, into pools of liquidity. So understanding how these fair value gaps are created is quite critical in understanding the thought process that goes into them, okay? Now, we don't necessarily know, and you can speculate until the cows come home, as to whether or not that they're buying it for a long-term hold or they're buying it just to pump the market. You don't really know that. But there are some things that make it a little bit clearer, at least in my opinion. And let me know if you agree with this or disagree with this in the comments. Let's jump back down into our chart, right? So here we have the hourly time frame, right, using BitGet. And we can see all these fair value gaps. So, and this is where my mind comes into play here a little bit, right? Do we think it's an acceptable behavior, psychologically speaking, that someone who wants to buy Bitcoin, let's say down here, or a group of individuals who want to buy Bitcoin at 26,800, they end up paying 27,000, then go ahead and place more buy orders at 27,100, but then that doesn't get filled until 27,300. So then buy more orders at 27,400, but actually end up paying 27,700. And then another setup here at 28,400, but actually end up paying 28,700. And then another one over here at 29,300, and then actually paying 29,500. So the question becomes, do we think that's a logical thought process? Because if you wanted to buy Bitcoin cheaply, then you would have continued buying. You wouldn't have continued placing your large orders, continuing to push that price to the upside, right? That would be quite illogical. What you tend to do is stop your buying and wait for price to come back down. Considering fair value gaps, price action and likes to go back down and fill it, right? Price likes to go and fill those fair value gaps. It's quite unlogical or illogical to continue to see these fair value gaps get stacked up like this, right? That wouldn't be quite a natural thing. It's not a natural thing to see. So then we start thinking, or at least I start thinking, okay, well, if the intention here is not necessarily for a long-term hold position, then, well, you are going to want to push price as high as possible to create big pockets of liquidity so that you can dump all your holdings at that higher price without negatively impacting the price right away. Okay, because everything comes down to supply, demand, and essentially liquidity. So it's important that we understand that there's many different reasons and rationale behind why we see fair value gaps, but it's very strange to continue to see them getting stacked up the way that they are. I think that is more market manipulation. And then, of course, I start thinking to myself, well, who is benefiting the most from such a situation? And, well, I think we saw FTX most recently stumbling upon $7 billion of crypto assets they just magically found out of thin air. And it does make you wonder why the market is pumping the way that it is pumping to the upside, and who is it that's truly actually making their money. And I think it's essentially the people who were in big financial difficulties back in November of 2022. Platforms that were either on the verge of bankruptcy are no longer. They're quite liquid right now. And then, of course, there's platforms that were bankrupt that all of a sudden have magically found billions of dollars of crypto assets, right? And then, of course, we've got people like Celsius who are going to be liquidating all their altcoin holdings and putting it into Bitcoin and things like that as well. And there's a lot of things going on. And one just makes it feel like maybe price was deliberately pushed to the upside just so that when these events occurred, they can actually liquidate their assets and become liquid again. And maybe there's a collaborative effort somewhere along the lines. I don't know. Speculation, of course, could be the worst of us. So one of the things that we know is, and we'll just go straight back to the facts, that we've got a lot of fair value gaps that are stacked, and these fair value gaps typically get filled out. Okay, and they don't always get filled out, but typically they do get filled out, which means a move to the downside at some point is kind of like an inevitability. It's kind of like a ticking time bomb, and all we have to do is sit back and wait for that an inevitable crash in the market. Now, that's no guarantee, of course, but it feels to me like there is a big catalyst just on the horizon, just waiting to kind of pop this balloon and take us down. But let me know what your thoughts are in the comments below on that one. Let's jump on over, right? And here we can see on our 1 hour time frame that we do find ourselves in a bit of a bullish movement, potentially to the upside. Okay, we can see ourselves with this overlapping corrective structure to the downside that is going down into lower lows and lower highs, and lower lows and lower highs, guys, goes up. Okay, so this coiling that we see here is a potential move upwards. Okay, so that's going to give us some encouragement to think that we are potentially still looking at a move upwards, and that we have still got further in this price chart to go. Okay, so positivity to be found in there. Now, of course, we can see this view on the daily time frame. Here we have higher highs and higher lows. These have a tendency to want to break on down, okay, but we're not there yet, so we'll see how that one plays out. We are overbought on the weekly and overbought on the daily. I'm not sure about the weekly at the moment. We've still probably got some ground to cover. Yeah, we've still got some ground to cover, so upward directional moves is fine. If we bring this back to our daily time frame, we can see that there's an upper test of our trend line that is potentially on the horizon here. Okay, we have got some interesting kind of resistances up here at 32 to 34k, and we do of course know, if I bring up our CME gap, there's a CME gap right here at 34,455 to 35,180 that I didn't think was going to go for. I didn't think we were going to go for that. I thought we were going to come down to the one at 21,110, but for the most part it looks like this is now a goer, so we can potentially see that CME gap getting filled out up at 35k before maybe visiting this CME gap down here at 20 to 21k, and that there will wreck a lot of retail investors. So lots of things to kind of be thinking about and keeping in the back of our minds. Essentially, we have a bearish setup here on our daily time frame, although this is the big bull trap, in my opinion, that kind of takes us down quite significantly, at least testing the existing lows, maybe even setting a new lower low. What the major catalysts are, I know a lot of people want to see some big fundamental reason as to why. For me, it's quite simple. The data suggests that there's very little demand in the market for Bitcoin. We can see this with the very little amount of Bitcoin actually moving around on chain versus where things were previously. So if you take a look at 2015, take a look at 2019, where we saw bear market reversals, volumes of Bitcoin moving around were significantly higher than they are right now. Okay, so we take that into consideration. We take the fact that wallet count data is skewing Bitcoin holdings towards low-end wallet counts, i.e. Retail investors are holding Bitcoin. A lot more Bitcoin is being held by retail investors over that of institutional smart money funds. And again, that isn't a huge recipe for success. It's almost like expecting retail investors to all band together, which can be done, don't get me wrong, can be done, but band together and work as one unit, not to sell and to hodl. Now, it can be done, but history tells us that most people are out for themselves, and as such, very unlikely, as soon as a time comes where they need to sell, they will sell. They're not going to hold a line for someone they don't know, essentially, right? Much easier for large amounts of Bitcoin to be held by almost single entities who have the decision power to buy or hodl. Whereas if you have a group of individuals who start the catalyst of overreacting emotional reactions to price movement, as soon as a few of them start selling, the sheep tend to follow. So a little bit of caution to the wind, considering not only are volumes and demand lower than they have been in the previous two bear market reversals, we also don't have Bitcoin held in the strongest of places, i.e. just retail investors. Of course, I'd love retail investors to kind of get the upper hand on whales. Who doesn't want that? And who doesn't want a bull market? I think most people do. Unfortunately, history tells us that it doesn't generally work out in favor of retail investors. So all in all, I would say we've still got some room to the upside. It looks pretty good. It looks like we're getting somewhere, but I don't think it's going to be lasting terribly too long. But you know, I would love to be wrong, because I would love us to be in that bullish market. I just don't see us there yet. Let me know what your thoughts are in the comments below. I'm going to leave the video right there. If you found it useful and informative, smash the like button. If you're new to the channel, why not subscribe? And if you're looking for a new exchange, check out 𝗕𝗘𝗪𝗔𝗥𝗘. Affiliate link is in the description down below. I use the platform for all of my leverage trading and about 90 to 95% of all of my spot trades as well. Check it out. Affiliate link is in the description below. Until the next one though, guys, have a fantastic day.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All other videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.